Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up for this Wednesday, the 3rd of March, 2021, right at 6 p.m. Central Time. Again, I'm going to ask a favor of you. I put these out for you all just about, as you know, I do them 6 days a week. I don't think it's a lot to ask. If you like them and you're a watcher, hit your subscribe button. Second thing, at least give me a thumbs up, all right? That helps with the algorithms on YouTube, and that's what I do these for, to get more viewers in. So if you know people, tell them. All right, that behind us, let's go to where we're really at in these markets. You're at a transition. The transition's been going on now since the first of the year, in all honesty. I know that I wrote and talked about in December on Bloomberg, creeping interest rates. They were going to happen because I believe that we are already at the point where we're starting to look post-COVID. And everything you're reading tells you that. Come on. Texas today, no masks needed. Now, that doesn't mean that smart companies won't make their people wear them, and smart people won't still wear them until the herd immunity is out. But the state released that. So tonight you saw already Amazon, Target, there's a bunch of companies saying, no, we want our employees and the people in our stores to still wear the masks. But the rates of infection are falling, the amount of hospitalizations changing, the amount of ICC beds that are out there not being used the way that they were, and all these new shots coming out. President saying by May, everybody that wants a shot can have their shot. That's important, real important. So what's it been doing? Well, it's taking interest rates higher. The lower you go in futures, the higher the rates go. That is also weighing on the stock market. The stock market doesn't like a transition to higher interest rates. And as much as the Fed will come out and say, oh no, we're not going to let it get out of hand, you know that they have been talking for years that they want to get inflation up and over 2%. If you're a Bloomberg fan and you read their columns today, they had an interesting graph where they're showing inflation expectations. We're up to the highest we've been in many years. I'm not talking a decade. I'm really talking out there. We're back to old-time highs. So the market's looking for inflation with the higher rates. Well, you'd say, why isn't that helping the gold? It's looking for inflation. Did you hear me? It's not there yet. It's looking for it to grab hold. So the first thing that gold has to do is knock out all those bulls that have held on too long. You're now down from the high $300 an ounce. You're causing a lot of pain to them. At the same time, the industrial metals, especially the copper market, doing very well. Now, I still look for this market to fall back to its 18-day average of closes. That is not bearish. That'll just get the market more in adjustment. When we're talking the metals, you have to keep in mind what the energies are doing. There's an OPEC meeting tomorrow. We'll see what the government there, or OPEC plus, the governments want to do. When we look at a weekly area chart of closes, this is the biggest break you've had since you were up last summer at that 2000 level. So these are important numbers. I'm going to repeat again. When you're under the 18-week average, gives you the bias to the downside. On a chart, you should have filters that give you ideas of what you're looking at. I'm not saying you have to do it, but I teach charting in my charting course, and I believe if you take that course, you're a complete different person than from when before. And I don't price it for thousands of dollars like people. It's not expensive. Put in 15 minutes a day in a month, you'll understand what I'm talking about. Give it 30 minutes a day, you'll be surprised how much you really learn. But that's where you're at that point. This is called leaking the market down, and it's a step ladder. A step, a step, a step, you're coming down. Come on. What is a downtrend? Lower highs, lower lows. It's not that difficult, and you've been going with it all the way through. What's the risk to the bears if the market gets back over today's high? Why is today's high? Because you had an outside day down, and often if you take out the high of an outside day down within 2 trading sessions, my rule is that the market then often tries to get back to the closest moving average. Now, the closest average right now is the 18-day moving average right here. We had a bearish crossover recently, and I did my very best to point this out to traders. I said, folks, now you've got a real ugly situation. I said this right on this day, I believe. This was now February 23rd. I said, you've got the short term, now you've got the medium term under the longer term, the 100-day under the 200. That's often a sign that lower prices are coming. I would have targeted at least that number, and that's basically, you've gone through that like it didn't exist, but that was your target number. And that's what this market is doing. Now, if you take that out, I'll argue that if that comes out and you don't get back under that low in the next 48 hours, then I'm looking for price in the 18-day average to make a run. Barring that, where's the market going? Lower Bollinger Band again. Every day it hits that number. That's that gorilla glue trade, and it's often accompanied by an embedded slow stochastic reading. That occurs when the two numbers that make up the slow stochastics are both going sideways under 20. Now, we cannot count today's numbers. We don't know how today's going to finish up, today being Thursday already. But we go to Wednesday, go to the day before, it wasn't embedded. You're just in an oversold condition that did not pick up that embedded part to it yet. Be careful here. As you keep drifting, at any point it's like a rubber band. You can let go unless you lock in that embedding. That would be the number that I look for. You don't have that yet. The gold-silver ratio. I've been pointing out that as long as you're under this number, it means as the number gets smaller, in a perfect world, you got your shopping cart, you put your silver in there, you're going to go to your friendly coin shop, they're not going to charge a commission. They're going to say, what are you bringing in, Bob or Harriet? And you're going to say, well, look what I've got for you. And you give them all your silver ounces, 64.84, and they're going to give you an ounce of gold. So the lower this goes, it means you don't need as many ounces of silver to get an ounce of gold, and that means gold is weaker than silver. And when you look at silver, that doesn't mean silver's in an uptrend. Silver too is in a downtrend. It's been in one. Now it's very oversold. It's in its first major support area. It's been fighting at this Bollinger Band. The next big number is 25.56. That is the 100-day average. Where's the inflation in this number? It was back here in February, but you've gone from that $4 lower. Do you remember those characters at Reddit that kicked this market up? They were going to squeeze the silver market and force everybody out. So now the market is down $5 in a futures contract. Each dollar is $5,000. Uh-oh, $25,000 lower on a futures contract. Just to give you an idea. Did the market stay over the upper Bollinger Band back there? So there are certain things that when the craziness goes on, if you learn some of these charting techniques, you're not as crazy as the rest of the world. I guarantee up here the fever was to buy, 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 buy. Those people got wiped out within 72 hours. And I say wiped out because if you're using a futures contract on a full-size contract, I'd call that a wipeout. And you can see what's going on. Now I view it as you're oversold, the odds favor, you're going to try to find footing down here. Would I be telling my clients if they called me, Ira, what do you think? Or they write me, should I go short? No. Simple. It's not a trade recommendation to you. I'm telling you what I would tell them. Why? Because the odds of staying under a Bollinger Band are 5% of the time. It's all I got to see. In the copper market, as I told you, when you lose an embedded reading, it doesn't mean I'm going to be right on this. These are some of my own rules. I make them up as I go, but I've tested them over 5 decades. And we didn't have computers when I started learning all this. Well, you lost your embedded reading. When you lose an embedded reading, my rule of thumb is that price and the 18-day average are going to make a run at each other. Where would I be wrong? If you take out the highest high the market made right in front of that. Well, instantly you're in trouble. I get it. And the market hasn't backed off. What did I start saying to you yesterday? I said, one of the things copper's telling us is that it's strong. Even though I expect my rule to work, I do. The fact that you had to come up all this distance, when you first lost the reading, it was, I want to give you the first day, it was right here, I believe. Yeah, that's it. And the close was 409.25. The initial goal was the 387 level. Notice how that's jumping 3 cents a day, and price really isn't going anywhere. So it's the moving average that's coming to price. That's a sign of strength, not weakness. So if the two come together, you get the market more in balance, but it's going to be probably, if it's not tomorrow, it could be in the 402 level. Very different play. Okay. In the platinum market, I'm still in the bear camp. Was yesterday, am today, but too oversold now. I'm looking for the market in this zone. You're already there, between here and the lower Bollinger Band for the pros to take off their shorts. And in the palladium market, you have a situation with an outside day to the downside today. That's what you look like. So if the market were to take out this 2377 tomorrow or Friday, then I'd be looking for possibly going to 2428. Don't take that out. You've put into play the possibility of 2307, 2308 area, as long as the market doesn't get extremely oversold. It's knocking on the door already of oversold. It's there, any reading under 30, but you got to be a bit cautious right here. As for the dollar, like the euro, it's just whipping back and forth between the upper and lower Bollinger Band, not doing very much, and probably hurting a lot of traders looking for follow-through one way or the other, and they can't figure out why it's not there. I see it, and if you join me in my morning subscriber video, you'd be seeing it, because I start you off in the morning talking all these markets that way. And in my morning video, unlike the ones that the public see, I'm free. The shackles are off. If I want to tell you buy, I'm going to say I think you should buy it right here. This is where you should have a stop. I'm shackled here. And that's because the general public can see this, and my license says no, that is not something I can say you should buy, you should sell. I want you to buy it at $10. I want you to put a stop at $8.53. I want you to come out at 11. No, I can't do any of that. Can I do that in my paid subscriber? I not only can, I do, but remember, that's password protected. There's many protections on it that the government says has to be there with disclaimers galore. They're all there. I cover these markets in detail. I have been waiting literally for about 5 days for another trade, 4 days, something like that. Today, we had one yesterday take place in the grain market. Yay. And it worked. So I'm a lucky guy. Patience paid off, because I'm not seeing anything in the rest of these markets necessarily. And that's what you do. It's a matter of patience and understanding. You don't have to be in the market every second. You want to trade chart patterns that make sense to you. If you'd like to see this, it's simple. It's $7.95, 6 videos a week. All the subscriber videos. That includes the Saturday weekly only charts. Just go to our website under the word futures. It's there. You can quit at any time. If you decide you want a better deal than the $15 for every 30 days, you can also at any point convert. And at any point, convert to a 1-year subscription for $13 a month, but you got to pay it all up front. I'm Ira Epstein. You have a great day. I will talk to you tomorrow.